Hey everybody, Boris, BK Forex. Welcome to the weekly technicals for the majors for Euro dollar, dollar yen, pound dollar, December 4 to December 8, 2017, final month of the year, and many unanswered questions still in front of us. Dollar really is at a crossroads right now, being buffeted both ways, both on risk aversion flows and economic flows. Tremendous amount of unknown questions basically in front of us on the fundamental side, and you can see the uncertainty in the technicals as we look at the charts in just a minute. The fundamental uncertainty, of course, is manifold. We have, number one, the issue of political risk aversion, clearly unknown as to how bad, how severe the Flynn flip is in terms of impact on the Trump administration. And it certainly could be something that could be much more material as we go forward. In other words, whatever political benefits the market perceives currently could quickly turn on its face if there is a serious threat of impeachment here for criminal offenses by the Trump administration. Secondly, very unclear as to whether the tax reform legislation, and I use that word very, very loosely, will have actually negative impact on the economy. And one of the possible reasons for that, and the market, of course, is not thinking this way, but one of the critical reasons for that is because the way the legislation is written right now, it actually becomes a massive tax increase for the 20% of the population that is has the greatest amount of discretionary income, sort of the upper middle class, because most of that population resides in what's known as the blue states of America, which are high tax states, and those states will have all their tax deductions revoked, and therefore, ironically enough, the only people in the U.S. population with any discretionary income, aside from the oligarchs and the billionaires, but those people don't really count because they can't buy more than one car or one boat or one house or anything else. But it's the marginal discretionary spend of the upper middle class of the U.S. that actually could be threatened by this particular piece of legislation, something the market really completely is unaware of, compounded by the fact that when you're looking at the U.S. data, while the data points have been positive, the rate of improvement has actually started to slow. And this is the other thing that I think is kind of fascinating, is that we may be actually not in this kind of second wave of growth front, but starting to see growth moderate. And if we have this kind of a situation where we have moderating growth, absolutely no inflation, and lack of any wage expansion, it becomes very, very difficult to imagine how this policy is going to be stimulative. I actually believe this policy could be recessionary, given the way it's written and given its actual physical impact on the average upper middle class income in the U.S. So it'll be fascinating to see all of those factors. And of course, finally, out of all of that, we'll have the data set this week in the U.S. with the employment data, and that is going to be very critical as far as seeing any kind of a wage growth. So far, not just in the U.S., but anywhere else in the world, we're not seeing any wage pressures whatsoever, which means we're not seeing any inflationary pressures, which means there's literally zero reason for central banks to tighten monetary policy, and therefore little reason for upward drift in the dollar, given the fundamental slowdown that we see here. So all of it kind of fascinating from many angles. We'll be watching at all the levels. The levels have shifted a little bit, but they remain relatively the same as far as the basic levels. 1800 to 120 in the euro. Dollar yen still oscillating in this 113, 111. 111 still remains very key support. Watching that very carefully, by the way, because I think if that gets threatened this week, that is a terminal negative effect for the dollar yen technically, meaning that after that it's almost a straight slice to 110 and a decline, which is something that I think very, very few people really anticipate. One of the things that could be fascinating here is the collapse of the dollar, something that is zero factored into almost anybody's investment prognostications, and could be the trade that takes a lot of people by surprise. And of course, cable, its own little idiosyncratic story here with Brexit. We have December 4th negotiations, unclear yet. It looks sort of positive that, in a sense, that the negotiations in UK and EU look like they're moving towards some kind of a consensus structure, but by no means guarantee that there is a deal on the table yet. And that, in many ways, I think is going to be the very, very interesting catalytic event, of course, for cable, because if there is, in fact, a deal, if they can solve the Irish issue, if they can solve the divorce issue, if they can solve all those things, and the Irish issue is probably the most intractable one that they're working on right now, that really opens up the run through the post-Brexit highs. This 136 becomes just a huge play to the upside. So in many ways, the most explosive story of the week could be cable if we get positive news out of it. Then you look at the calendar here. On the economic calendar, not much going on here. U.S. Durable goods. What else do we have? We have UK PMI services, which will be interesting to see. That's been supported. PMI manufacturing has been supported. We'll see if PMI services is supported. But all of that plays second fiddle, of course, to the Brexit negotiations, which is really what the market is driving on. A smattering of second-tier European data. GDP is supposed to be pretty good, but not much of an impact on trade here. Australia is going to have retail sales. Actually, this is a look we should be looking at. We're going to have retail sales and the RBA decision Monday night. That should be interesting, I think, and we'll get to that when we talk about the condos. I don't want to talk about this right now. Sorry, I got myself tracked off. On the majors, the second half of the week is really all about employment, right? We start with ISM ADP numbers, the ISM non-manufacturing, all of those prefiguring what the U.S. Employment numbers are going to be. We'll have a smattering of UK data here on Friday with the manufacturing and visible trade, but by that point, the story is really going to be do or die on Brexit, and that's really going to be the story in cable. And we finish up the week with the very, very important non-farm payrolls. Not so much the jobs number, not even so much the participation rate and the employment rate. None of those things really matter. It's the average hourly earnings. That's really going to be the key. Right now, market is looking for 30 basis points hike. That would be satisfactory. We don't get that. It really becomes very difficult to imagine how the dollar can rally. But if we do get that, that may revive the dollar rally, assuming that we don't get any more political bombshells coming at us as we go. Now, looking at the charts here, the trades actually look negative dollar in many ways. So if you're looking at the anti-dollar trade, the euro still maintains bid. We held the 1800 quite well. Technically, this looks quite good, and euro looks like it really wants to go back up towards the 120s. The key thing here, and this is where it gets very tricky here, is if we break the 118s, that actually I think becomes very positive dollar, very negative euro, because if we break the 118s here at the front of the week, that would suggest a lower high over here, a failed high effectively, a failed run towards the yearly highs, and a drift back down towards perhaps the 116s. It would sort of tell you the market has shifted into a pro-dollar mode. But until and unless the 1800 is broken, you have to just basically give the benefit of the doubt to the euro and believe that we have a push all the way through the 120s as a re-challenge of the yearly highs. On the dollar yen, the story is, of course, the opposite. You know, we tested the 111s. We broke it. I think we broke a little bit of it, right? What would be like about 84. But really, the critical thing here is this 110.50 level really held. Pretty bullish close, I guess, given the shockingly negative news on Friday on the risk aversion front. This is a pretty decent candle, actually. It suggests that the dollar bid stays in place right now. But how we trade within the next 2 days is going to either confirm or deny this little buy-up. What I mean by this is if we go through Monday without testing the lows here of the 1140, that would really give you a lot more confidence that the market is preparing for a dollar rally and a re-rally back up towards the 113, 114 handle. If we wobble up here and the market begins to start to sell off, in other words, this buy-up was just simply short covering into the Friday close. If we break the 111.50 level here, right over here again, that's quite negative. And of course, the much more important level here is the 1050. Then it basically just a straight line down to 1000. So I think Monday, from a technical point of view, is going to be very interesting to see how well we trade. If we can just hold the lows of Friday, that would suggest that maybe some of the worst woes of the dollar have passed by. And of course, cable, very much its own story here. It's going to be all Brexit all the time as we start the week. We'll see what the headlines are going to be. This is a viciously tough trade to make unless you get unambiguous data. This is the key thing. my warning to you as far as trading this is that this is a headline trade, meaning that unless the headlines are confirmed and you are certain that the information is good, you could have vicious reversals here one way or the other. In other words, you could have a leak that the Brexit negotiation is almost done, they're ready to sign a deal, and then a complete denial half an hour later and reversals both ways. For right now, looking at the technicals, the market clearly believes that the Brexit deal is in the works, clearly believes it's going to get done, and it's clearly bid cable. And if you take the consensus view here, the trade is to the upside, and most importantly, the trade is through the 36s here. That's the really big move here that the market seems to be gearing up for on a pro-deal structure. So that's how the week shapes up in the majors. Quite a lot of very interesting stories, a lot of levels to look for, and front of the week to back of the week kind of drama that are really going to drive price action as we try to trade the week. Wish you guys the best luck, the best trading. Boris, over and out.